Hello guys, tomorrow earnings report unveils key 4 impacts: layoffs, factory buyback, CYVN investment. Anticipate surprises and possible losses. New earnings are due tomorrow, and there are 3 extremely important things you should know. Otherwise, you might face a sudden shock, and all 3 things happened in Q4 2023, which could impact tomorrow earnings report. So each of these things is extremely crucial. First, in November, NIO laid off 10% to 20% of its staff. If you remember correctly, now, in some departments, this was up to 30%. But when everything was said and done, when everything settled, some media outlets reported that the total number of employees laid off from HQ was close to 3,000. But the biggest issue was severance pay. Now, severance pay is quite interesting. Typically, people are given N+1, where N is the number of years you've been working at the company. And if it's less than 1 year, it's just 1. And then you get an extra month's salary. So if you've been working at this company for 2 years, you get 2 + 1. So you get a total of 3 months bonus salary for your severance. Now, for NIO employees, N+3 is quite a lot, which is a big advantage. And the people who were laid off were quite happy because it meant that if you've only worked at NIO for 1 year, you get 1 month plus 3 months. So giving an extra bonus of a month. And this is absolutely insane. And some old employees, if you've been working at NIO for 4 or 5 years, you would be getting a lot of months bonuses. This will have an impact on the earnings report for a one-time expense. But it also means that in the future, of course, expenses will be less because those jobs won't exist. So this is the first thing to pay attention to. Now, the second thing to pay attention to is the factory. Now, if you remember, NIO had bought back the factory that was previously owned by JAC. First, NIO gave money to JAC to make NIO cars, and NIO directly used the money to buy back the factory and all assets. Now, how much money was given? So 3.18 billion RMB was given, which is about $438 million. So this is a one-time payment, and they bought the factory back. And the good thing is, now you don't have the JAC badge, but you've reduced the cost of making the same car by up to 10%. Because earlier you had to give it to JAC. Now you won't have to. Remember, these aren't margins. This is just the cost of making a car. This is optimized by up to 10%. So this is quite good. But still, there's another big expense there. 400 million. Quite insane. So we might see a big surprise there. And then the third factor, which is a very good factor, is, we all know, the investment from CYVN, a $2.2 billion investment from CYVN. This is basically a big cash injection to boost their cash position. When you guys look at the report, investors, they look at the report and they see that there has been a significant increase in cash reserves. This is very, very good. But if we look at the numbers for Q3, so in Q3, their loss was 663 million. Yes, quite a big loss. Most of it came from R&D expenses, which were around $416 million. And what are they researching? Certainly, in the next generations of cars, NT 3.0 and ET 9 things, and in future cars, game-changing cars, certainly, and then the development of swap stations, development for the charging station network as well. So these are the things they are working on. And the CEO has said that they are not cutting any expenses on R&D. So this means that we shouldn't expect to see any significant decrease in R&D. Personally, I'm hoping for a slight decrease because they have done most of the R&D work for ET9 and NT 3.0 cars. So I don't understand where else they can spend more money. But certainly they are still spending more on setting up additional swap stations and things like that. So they are certainly still spending around 400 million, again, R&D expense. But perhaps a little less. Perhaps it could be 390 maybe. I hope R&D expenses will be less than 400 million. But yes, perhaps another 400 million R&D expenses might come for the earnings report that is now coming for Q3. In terms of revenue in Q3, they had revenue of 2.6 billion, $2.6133 billion, delivered 55,432 cars. So if you analyze a little bit about how much revenue is for each car, and then you multiply it by the deliveries of Q4, which were 50,045, which 5,400 less than Q3. It's quite surprising that this is less than Q3. Q4 should have been definitely more than Q3, but it wasn't. So this comes to approximately $2.359 billion estimated revenue based on deliveries. So this is nearly $300 million less than Q3. Is it possible that we might see a decline in revenue quarter over quarter? This is entirely impossible because you're delivering fewer cars in Q4 than Q3, so you might see a decline in revenue there. Now, a possible big astonishing obstacle is that things that can affect everything and can change everything, right? Because what I've just told you, all these things that have already happened, they're quite significant cash expenses, right? If you add $400 million in the factory plus $400 million in R&D, that's straight $800 million there, right? And then some employees might be allowed. Maybe some more surprises. Yes, we are approaching a loss of up to $1 billion. It's quite difficult to digest. Now keep in mind that we are expanding in the UAE, which is very good. But I understand that perhaps the biggest surprising thing that can affect everyone is partnerships, and whether they are getting direct money from partnerships. Maybe a specific amount is paid, which does not take much money at all. But if they shed more light on partnerships and what kind of revenue is expected from them, then this could be a big change in the earnings report. It's also very possible that NIO large cash reserve could turn into a big advantage in the earnings report, and it could really surprise people that they have so much cash in the bank. So this could also be a big advantage. But overall, it seems that the things that happened in Q4 have cost everyone a lot of money. If you look at NIO current car maintenance for January and February, maybe the outlook for Q1 won't be that good, to tell the truth. So let's discuss this. I want you to understand the truth behind what happened in Q4 with the purchase of the factory, followed by layoffs, and then the surrounding investment in CYVN, and perhaps the R&D expenses not being as low as expected. Be prepared, and don't be too surprised if you see some significant losses. But the loss won't be as extensive as it may seem. It's a one-time loss. It won't happen every quarter. The factory won't be repurchased or people won't be laid off every quarter. No, but be prepared that some investors might be concerned about the expenses incurred in Q4. All right, so just hold your head up high. Stay informed about what's happening, and don't beat yourself up in any way. Understand that the money spent has been for good reasons. These are all necessary cost-cutting measures so that we can benefit and see our NIO stock in the triple digits. We'll get there, but it will take time to reach there. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing and see you in the next video.